All right, hey everyone, I'm Austin Lee. I'm a Bay Area real estate agent with Gaia Realty, and I work with buyers and sellers across the Bay Area. So as we close out the year 2025 and we look forward to 2026, most people I talk to have the same question about 2026. Is the Bay Area housing market, is it going to boom, or is there going to be a crash coming? And I would say the honest answer is actually neither. And what we're moving to is actually something very different. And I call it the return of selective demand. So in this video, in this presentation, I'll break down what that means and why the Bay Area market doesn't behave like the rest of the country and how buyers and sellers should actually think about the Bay Area real estate market in the year 2026. So the biggest misunderstanding I want to talk about when you talk about the Bay Area market is they think about the Bay Area as the one single market, like it's one monolith. But in reality, it's not because the Bay Area is a really big place. The Bay Area has nine different counties, and it goes all the way up the north here across the Bay Area. You have Sonoma County up here. We have Santa Clara County down here. So that's about like 100, even 200-mile difference. And it's like a 2 to 3 hours driving in one direction. So it's a really large area. Also, each county in itself has a bunch of different cities, right? So here we have Santa Clara County. This is the most southern county in the Bay Area. And in this city alone, you have 17 different cities. So the Bay Area is really a collection of micro markets, and it's really hard to give a precise answer when it comes to, what's the Bay Area housing market. So when it comes to micro markets, I could think each market like a different car, right? So you can see in this example, on the left, we have a Toyota Camry. On the right, we have a McLaren, right? So normally when people talk about cars, they come in different classes, right? A person that's looking into buying a Toyota Camry, they're probably not considering buying a McLaren, right? Because they're way different price points, right? They're way different buyers. These buyers have different priorities, have different budgets. And in the same way, like if you say, oh, Toyota Camrys are a good deal, but if you're looking to buy a McLaren, does that really matter to you? Probably not, right? Because they're not really in the same tier, right? So I think in the same way that you can talk about in certain areas, certain cities, let's say like a Palo Alto, like a Burlingame or Los Gatos. Let's just say like, oh, when that housing market's there is doing really hot. But let's say if a person's shopping in, I don't know, like San Jose, Dublin, Castro Valley. Not to pit cities like one is better than the other, but just saying that it's a different type of market in the sense that um, one housing market in one city does not really affect another housing market in a different city because again, these houses are different budgets, different price points, different days on market. It's also different. So that's just one thing I want to think you got to think about. So when thinking about Bay Area housing market, be really specific. What part of the Bay Area housing market are you interested in? Because that's really going to make the difference. See over here, you can see a lot of news articles, Bay Area housing market, due to AI boom, Redfin, let's say property values going down, tech wealth effect. So you'll see a lot of different headlines that people try to characterize the whole Bay Area housing market into one, simple as doing good or bad. But in reality, it's not really accurate at all. It really depends on what market you're trying to shop in. Now, we already talked about different counties and even within cities that there are different markets, but even within cities themselves, there's different housing markets as well, because a lot of cities here in the Bay Area are split to different school zones. So even homes just across a certain street can have a completely different market value. Like, for example, the city of San Jose, there's about like five different school districts, depending on where in San Jose you buy. You could be buying a home that maps to Cupertino School District. You could be buying a home that maps to the Campbell School District. You could buy a home that's mapped to like a San Jose School District. And even though all these homes are technically a San Jose zip code, because they all map to different school zones, the housing market and the price points of these homes are all going to be completely different. Also, another market separator in the housing market is also the home type as well. So there's different types of home class types. There's condos, there's townhomes, there's single family homes, there's even mobile homes. So all these different types of class homes, they have completely different buyers, different price points, different budgets, right? Because normally condo buyers, they're often they're deciding whether, oh, should I rent? What's the monthly payment like, right? Whereas townhomes, they kind of sit in the middle. They have more space than a condo, but they're very similar as well because they have HOA fees. And then whereas single family homes, they're often driven more by school zones, right? These are more, most buyers in single family homes are families. So they're thinking about more long-term ownership compared to a condo and townhome. So now I want to talk about, again, different cities, different school zones. You can hear the city of San Jose. This is just a quick example. You can see West San Jose, which is a neighborhood in San Jose. The average home price is about what, $2 million. And where you go to East San Jose, which the average home price is $1 million, which is a massive difference. Now, granted, San Jose is a different example because San Jose is a giant city, right? Because San Jose, West San Jose to East San Jose with traffic, that could be like a 30 to 45-minute drive. So, but anyways, so the gap in most states was not going to be normally this big, 2 million to $1 million. But the idea is that even within cities, that there's pretty drastic different housing market. All right, so let's actually talk about what happened in some Bay Area counties here in the year past 2025 to just to get a high level market overview. Now, I wouldn't worry too much about the exact prices here because, again, like I said, depending on where you want to buy in this county, these numbers aren't could be close, might not be close at all. But what I think is nice to look at from a high picture view is that you get to see about like what's the peak of the market and what's the speed of the market in these respective areas across the Bay Area. So we can see here in Santa Clara County, this past year, we had about 11,000 sales. And it started about at 1.49 million in January. And the median sales price, it kind of peaked all the way up. So from January, it started going up to went all the way up to 1.72 in April and May. And then in April, May went down again. It's maybe like people are going on summer vacation. So again, less home buyers as well. And then you get a little smaller peak in September, October at 1.63 million. It kind of makes sense. Kind of end the summer, people, they need to find homes at that time of the year. So uh, if they didn't find a home they liked earlier in the year, and this is kind of where they kind of, okay, maybe I do need to go buy a home. Okay, so this closed out 1.56 million. And you can see the days on market is actually very quick. 8 to 15 days, the median days on market. So generally, the home is very desirable here in Santa Clara County. You only get like one weekend to really see and decide to put an offer on the home. All right, so let's talk about San Mateo County. Now, San Mateo County is a lot smaller than Santa Clara County. So you can see it's only about 5,000 sales. Overall, the price point in general is going to be a little bit more expensive generally because the peninsula has a lot more tech jobs, and also closer to San Francisco as well. So generally, overall price was generally a little bit higher compared to Santa Clara County. Now, it started about, again, very similar, 1.56 million in January. Again, I did a small peak about 1.7, and then another peak about 1.77 in May. And it kind of started going down again, right? As you see, as the summer comes along. And right September, October, again, near the end of summer, there's going to be a little bit a spike when people do need to want to buy a home. And it closed at $1.55 million. Now, the days on market, again, ranges from 10 to 21. So again, also very competitive. Maybe slightly less than Santa Clara County, but again, 1 to 2 weekends generally, especially a very desirable house, that's going to come off the market pretty quickly. Now, another county I want to talk about is Alameda County, which is north of Santa Clara County. That's currently you have from Fremont up to north, Union City, Hayward, and there we had about 10,000 sales. You can see start about 920,000 in January. So it's definitely a lot lower compared to what we've seen in Santa Clara and San Mateo. It keeps surging up 1.77 in March. Again, then after March, April starts going down again, and they get another peak again in October. Right. So again, people closing in January, people getting contract in September, but they close in October. So again, near the end of the summer, closed at 1.001. So it did go up from January to December. So you can overall see compared to Santa Clara and San Mateo, it is jumping up. There's a little bit more. I would say obviously it's a market that's going to be uh, higher, right? Because a lot more people can afford in Alameda County compared to Santa Clara and San Mateo. You can see days on markets slightly slower than those two again. So I think some key takeaways is if you're in the housing market right now, I definitely think right now is a good time to jump on it. Obviously, there might be a little less inventory, but you can see pretty much in all three of these graphs, December, January. Um, well, I guess January is because that people are closing, there's less people are closing in December or getting contract in December. But you can see up until now, all until spring, until March, April, no matter what county you're in, it generally you can see a surge in home prices, right? So if you're willing to buy, if you're ready to buy, it's just only going to get more expensive up until March and April. And then you go in the summer, there's going to be a slight decline again. So that's just, if you're in the market to buying a house, I would definitely recommend to try to look as soon as possible because from a buyer, you're definitely going to have less competition. Now, another thing I want to talk about the housing market is the interest rate. As you can see from this graph, it started to trend downward from this year, right? Earlier in this year, it was about over 7% in February 2025. And now we're at the end of the year, it's about 6.2%. So it's almost gone down, what, 10%, more than 10%? Yeah, more than 10% at 6.2%. So it's definitely gone down a bit. But relative to COVID, right? COVID was about, we had 2, even 3% interest rates. So a lot of buyers are looking at that rate and they're thinking about like, oh, when it was so cheap, maybe will it go drop down again? Let me wait this out if I don't really have to buy. So again, when it's interest rates, they do affect a lot of buyers, right? First, especially the first time buyers, right? Because they feel like they're getting priced out of certain segments. So they become more cautious and they become pickier. And they often some even pause their search until they feel like the rates will meaningfully drop. Another way these interest rates affect the housing market is sellers being locked in, because obviously when you sell, more likely you're going to be looking to buy as well, right? And you don't want to buy at such a high rate either. So if you don't have to sell, there's a lot of sellers just again trying to wait it out. And because of that, we have less supply, we have less inventory, and hence there's going to be more competitions for the homes. Now, the third is the high-end market is actually unaffected because a lot of these buyers, let's just say they just have a lot of money, right? They're have good stock compensation, whether through their tech jobs, they may be dual income, they have larger down payments, so they can afford. I mean, they could afford a higher interest rate, or they could just even be a cash buyer even. So if you're a cash buyer, interest rate literally means nothing because you're not even taking out a mortgage instead. So you can see in this chart, I have a condo for a single family home, and this is in Santa Clara County, where I would say the condo and townhome market is a little bit more resilient even compared to another county where it's a bit lower, a little more affordable. But you can see like a single family, it's been generally like still pretty dominant, right? It's still going up again when you go to February, May, March, April, May. There's a little drop off in summer, but that's expected. But look at the condo single family, even in Santa Clara County, where it's probably the best single family condo market. If you go to San Francisco, if you go to Oakland, you go to Alameda, I promise you, it's going to be even more drastic. But here you can see from February, it just started going down. It's like a complete opposite of the single family. So again, that just shows how interest rate has really affected this market, and it's been a lot more difficult for sellers selling these type of properties compared to single family homes. Okay, so let's actually talk about what really drives the market here in the Bay Area, because the market doesn't move the same way as most of the country does. So there's 4 forces that consistently shape Bay Area prices, regardless of the short-term headlines that you're going to see. So first is the high income jobs, right? So the Bay Area is one of the highest paying regions in the world for specialized roles, especially in tech, biotech, and now AI. So you can see in this map, these are all the tech companies here in the Bay Area. So it's good for good reason. You're going to see homes around these areas. They're going to be a little bit on the more pricier side compared to other homes that are further away from these areas, right? Because especially now with the return to office mandates coming, a lot of these places, it's not even hybrid. You have to come to the office 3 to 5 times a day, 3 to 5 times a week. Homes around these areas are just generally more desirable because people don't want to commute as much. Also, the traffic will be a lot worse, right? So homes around here are going to be cheaper, but you go closer here, see a lot of tech companies are along the peninsula, along the water here. So these are going to be where the most desirable homes are because they're just where the high paying jobs are. Number two is going to be stock compensation and equity. Because a lot of Bay Area, these tech jobs, they don't just offer a base salary, but they offer a sign-on bonus. They offer stocking that vests. So a lot of these stocks, they're just used to eventually liquidate to support these down payments for these homes. So that's why demand here doesn't disappear the way you expect when rates rise. Now, number three, it's also the limited supply of land. So you can see in this area, this place is all mountains actually. This is really not like livable land where people can just build homes. So inevitably, it just becomes like a very limited area for people to build homes. So there's a very limited real estate, right? It's like a beachfront mansion almost, right? There's only so much land that can be so many beachfront mansions that you could build that could face the ocean. And it's very similar here in the Bay Area. There's only so many homes that can be in this area because this part is just all Santa Cruz Mountains, it's really unlivable. You got the water in this direction. So in terms of housing, you can only build houses really in one direction from these areas. Also, the zoning in these cities, they don't really want to build more homes, right? Because a lot of these areas, they're high income areas. There's a lot of nature, a lot of trees. And these residents, they don't want to cut these down to support new housing. So, in general, the supply of homes is generally just going to be very low in this area. Also, Proposition 13 is also affecting the price in these areas because Prop 13 allows these homeowners who are currently owning homes to keep their property taxes really low, right? Because we've had a massive spike in home prices the past 20, 30 years. And property tax is generally 1% of when you bought it, right? So you buying a home, let's say like $1 million in in I don't know, Sunnyvale, let's say $1 million, even though it probably wasn't $1 million 25 years ago. Just put keep it rate. So your interest rate would be that your property tax would be 1% of that $1 million, right? And now you buy a home in Sunnyvale, it's probably $3 million, right? So that's about what 3x you're paying in property tax. So again, that's gonna because people can keep that, but they don't want to buy a new home to reset that property tax, right? So again, it creates very little incentive to sell, right? Also, capital gains tax as well, right? Because right now the capital gains tax, I believe it's $250,000 or it's tax free. And the rest of that is going to be capital gains tax. And capital gains tax is 25, 30% of the profits. So again, you bought a property, let's say $1 million. Now you start to sell it for $3 million. Of that $2 million, only 250,000, or if there's a couple, it's 500,000, then that's going to be tax free. The rest of that is going to be capital gains tax. And that's a lot. I mean, that's better than stocks, I guess, because you still have that 500,000. But overall, that's still a lot of money that goes into capital gains tax. So again, that's why you have a lot of low turnover here in the Bay Area. So when you put this all together, you get a market where prices don't really behave the way people expect. All right, next, I want to talk about what selective demand means, right? And the first thing I want to talk about is quality over quantity, right? Because back then, interest rates were a lot lower and homes were a little bit more affordable for more buyers. So buyers would chase anything. They were willing to get more bedrooms, more square footage. But right now, it's a selective market and that changes. So buyers would rather wait for that one good home rather than rush into five mediocre options. Now, by quality, I mean like the fundamentals, right? Like a home layout that makes sense, a location that people want to live in long term, strong schools or strong rental demand, and a home that doesn't come with like the obvious headaches with like deferred maintenance. So that's why a well-located, well-presented home still gets really strong interest here in the Bay Area, right? The second shift is going to be strategy over timing, right? A lot of people generally try to time the market. They're waiting for the perfect rate. They're waiting for the perfect price drop, a perfect headline. But here in the Bay Area, waiting for perfect timing often means you're missing out the right home, right? Because strategy means understanding your specific micro market, your neighborhood, your price range, your home type. It means knowing when to be aggressive and when to be patient by knowing the market. And also means, structuring your offers and your pricing correctly instead of just hoping the market moves in your favor. Because I've seen buyers like they wait for years for rates to drop, but they end up paying more because people are also waiting for rates to drop, and then the competition just suddenly goes up. So even though you ended up getting a lower rate, you ended up paying more for the house. And I've seen also buyers buy the home at the right price, even in a higher rate environment, and they do very well long term because they're able to refinance the rate. So one thing that you can remember is that you can refinance the rate, but you're not going to be able to refinance the purchase price of the home. So I want to talk about how the buyer mindset has changed, even just the past 5 years, right? In the year 2021, I would say the market was emotional. Buyers were driven by the fear of missing out. The rates were extremely low, inventory was tight, and homes were selling in days. People were even willing to waive contingencies, overbid aggressively, and made decisions very quickly. Priority wasn't really value back then, but it was really just trying to take advantage of the rates. But now in 2023, the mood shifted, right? Rates jumped, uncertainty increased, and the buyers hit pause. And a lot of buyers are worried about overpaying. They're worried about layoff, especially if you work in tech, and they worry about what would happen next. So, even serious buyers, they kind of slowed down and waited for clarity. But now heading in 2026, I think the mindset's gonna be different again. They're going to be a lot more analytical. They're going to be running the numbers, they're going to be studying recent sales, reading disclosures, and comparing options. And they're willing to walk away because they're waiting for that right fit. So when a home is priced above recent sales, buyers don't rush. Homes end up just sitting on the market, and that eventually makes the homes having weaker negotiating positions. So what would I tell a client right now? So for year 2026, I think the biggest mistakes that people think about when buying or selling in the Bay Area is focusing too much on the national headlines because, national headlines, yeah, they're useful for understanding the backdrop, but they're not really great for making local decisions because national housing data, they average together thousands of markets with completely different dynamics. What's happening even in the Midwest or Sun Belt, or I would say even 2 or 3 counties away from you, they don't really affect your county. They could be completely different. Again, like I said with the car analogy. Now, what to actually watch instead is to look for local signals, right? Watch how many homes are coming on the market in a specific neighborhood. Watch how long they're taking to sell. See which homes are getting multiple offers or price reductions. Also, look at some local real estate headlines, right? Especially relating to tech. A lot of companies, you can notice that they're trying to buy more land here in the Bay Area. And so I think that's a pretty good trend that the Bay Area is probably a good place. But you're also, depending on what sector it is, there could be layoffs too, right? And I think those are trends that you want to be aware of because those trends are also going to be affecting the real estate market. Okay, so to wrap this up, the 2026 Bay Area market isn't going to be a boom, nor is it going to be a crash, but rather it's going to be a market defined by select demand. So if you're thinking about buying or selling in 2026, don't rely on the national headlines or generic advice. But rather, what matters is your neighborhood market data, whether it's regarding your home type or the local headlines, right? Whether it's like the job market or the real estate market there. So if you want a clear or local breakdown in your city or area, happy to help. My contact info will be in the description below. You can see my emails also at livinginsfarea@gmail.com. That helps for you. It's because in the Bay Area, being informed is going to be your biggest advantage in the year 2026. So, all right, check out more videos on my channel if you're looking to learn more about Bay Area real estate. And I hope I'll see you in the next video. All right, take care.